Good morning and welcome to the Orlando Real Estate Buzz. I'm Brenden Rendo with the Homes in Orlando team at Next Home Neighborhood Realty and joined by Joseph Dion of Aptly Home Loans. Nice place you're sitting in today. Looks pretty cool.
Yeah, I'm on the road a little bit. I've got a big race. I'm racing Ironman Chattanooga, and I'm in Chattanooga right now. Weather was nice, and I needed a place with internet because the internet was out in my hotel. So
Well, I hate to tell you, but the picture's better than at your office.
So you're saying is the office building needs to upgrade to fiber because apparently that's what they're running at this random event place in downtown Chattanooga, which is
It is a great picture. Oh man. But anyways, it's kind of nice today. We got some good news, a little bit of sunshine out there with some things that are going on. We got reports of new home sales popping up a little bit. We got mortgage rates really kind of stabilizing for everybody. And, got the jobless claims came out and that actually went down a little bit. So it's kind of nice to have some good news to bring to everybody today. So sit back and enjoy the Orlando Real Estate Buzz. So let's start off with new home sales because this really kind of makes some sense to me overall. And new home sales spiked to a 3-year high,
wow,
which is phenomenal, which is great to hear. Up in the South, which is our region, which is great. But it makes a lot of sense because I think we've talked about it that for one of the first times in history, it's actually more economical to buy a new home than it is to buy a resale.
Yeah.
And it comes down to just all the incentives that the builders have been putting out there, which have just been, incredible, from the additional closing costs, the flex cash, and quite honestly, buying down the rates.
Yeah.
I've had the conversation. It makes it difficult for you to get for the new homes, but I've had the conversation with a couple clients thinking about it. I'm like, well, if they're going to buy it down, take the 30-year fix. Don't do the 2-1. Don't do the 3-2-1. Take the 30-year fix, because if they buy you down for a point, just think about it. That one, it's not only saving you money up front, but you don't have to refinance down the road.
Exactly. It's locking it in, and it's the whole game where what did we talk about before, where so many buyers or agents kind of sold the, marry the house, not date the rate, marry the house. Mm-hmm. And they were like, oh, the rate's going to go down. And it took so long. Like, we're finally starting to see some reprieve on rates, but it's still kind of very similar, a little bit not, I'm still curious to see if we play out similar to what we did last year. But the key here is that on the new home, they're giving the incentives. Like, I talked to a client just this past Tuesday that they were looking at new build, and they were like, I had pre-approved them a few months ago, and they were like, what do I do? And I was like, take what they're offering you. Like, yeah, I would love to do the loan, but that's not the right advice here, because they were giving crazy incentives, buying down the rate, reducing, like giving credit card. It was something like it was almost like $50,000 of incentives to use their preferred lender. Like, yes, do that all day. Like, I'm never going to steer someone to use me when it's not the right choice. And that's the beauty, and I think that's why we saw these home sales finally start to spike.
Yep, and their inventory is still high. When you look at their overall inventory, their inventory is still high. And here in Orlando, what you're seeing is the emails, the incentives we're getting from them are for what's called their quick move-in sales. And those are houses that they've actually got built, basically speculation that they're going to sell them, and they're sitting in inventory. And that's cash that's not flowing for them. So what they're doing with a lot of these, with the quick move-ins, is they're really piling on the incentives, because it's finished. I need to get this off my books. I need to get the cash back so that I can move another one. And you're seeing that with the quick inventory levels that are currently happening here in Orlando, that, hey, they're really, really starting to even more push those incentives.
Yeah.
The one thing I don't get is they're also starting new developments here and new developments there.
Yeah, that's always they already paid for the land. They got to start them at some point.
Yeah. Unlike the 2008 era, you aren't seeing them push them to the side. They're actually continuing to to build. So, it's one of those things. Just look at the incentives, sit down, do the numbers, because man, it does make it extremely attractive to look at new houses over the resales. And then, of course, this week, mortgage rate, we've seen a nice, steady leveling off of mortgage rate. Really no bounce high, no bounce too low. We did get what we had warned everybody about, which was that little bit of bounce back because they had oversold the rate cut.
Yeah, I think, and what's funny is, I have a client absolutely particular that comes to mind with this, because where we are right now in rate is essentially where we were a week before the Fed cut.
Mm-hmm.
But I had a client that waited all the way until the Fed cut, and then he applied for a refinance. And wait, why is it worse than what you told me a week ago? And I was like, well, exactly what I told you. I was like, if you know what's happening, it's already priced in. It's not going to be, and the market's going to react out, and it's going to kind of level off. But the rates are still in a great position. They're still really solid. Like it's really awesome. Like we've got a lot of clients, and I know if you're looking at that, the 6.37, that's kind of pretty much right there on Mortgage News Daily does a great job for kind of just a rough idea. But we've got some of our clients with a small buy down getting into the high fives, 5.99 on conventional, which is huge. I'm getting ready to do, I've got a client VA, 5.875, their specific scenario. Not everybody's going to be, but 5.875, their specific scenario, no points.
Mm-hmm.
It's really, really cool to see kind of these, like finally see fives again. And not be
even if it's the high,
points to get them.
That mental, that it's in the five, even though it's maybe 5.875, it's not 6, and that's it. A lot of it is just that mental. Like we watched pretty much all last year and the year before. We're saying it only seemed like that 6.5 was the point where we saw a little relief from people. And not quite as much as we had seen in the past, but there's a little feeling of hope, I think, out there. A little feeling of just a breather that we hadn't had, because it just felt like we were just fighting the market so much, to make numbers work out. That little bit of reprieve has just kind of made people relax a little bit more than we had seen in the past. And for a lot of people out there, the Hometown Heroes program, that wanted to bring this up, because this is helping the Hometown Heroes program too, because those rates are tied to the state, but that's going to give some relief there. And we still have $34 million in that program available. That came out just this morning.
It's moved a little bit slower than what we've expected. Honestly, I thought it pimped, it had so much pent up demand that it was going to go really, really fast. I love the fact that it kind of became Hometown Heroes again, like 4 actual heroes in the state of Florida. Your firefighters, your nurses, your educators, stuff like that, not just for everybody, because I think that might have what drove it to be used up so quick in the prior year. But the one thing that I have noticed with the program is, with the big adjustment on rates kind of going down over the last couple of weeks, Hometown Heroes and Florida Bond, a lot of these Florida-based programs, we haven't seen a similar improvement in rates as aggressively as we have with just standard rates. So they've kind of lagged behind. So when you have a client that maybe can take advantage of it, and it's like, and I had one recently that was a nurse, and I was like, here's what our rate is. And they didn't need it. They were going 3% conventional. They had the funds. They got some seller credits. Like, it would have been a great program. But in this situation, it was, here's the rate in Hometown Heroes. Here's the rate without Hometown Hero. And they were going to save $150 a month by not going Hometown Heroes. So that's something that you got to look at a little bit more. If you absolutely need the funds, take advantage of it. But if you don't, you really want to make sure you talk to someone that's not going to just throw you in there and not think twice.
Exactly. Because remember, those funds have to be repaid if you refinance or sell.
And it's not going to be subordinated. So if you do a rate and term or something like that, you got to pay it off. So a lot of VA FHA buyers from years past, hoping to take advantage of refinances now, are finding out that, they didn't see the values of their home grow at the rate that they thought they would, because they overpaid before. And now they're sitting there going, I got to pay off that $25,000 or $15,000 or $20,000. I didn't know I was going to have to do that to refi.
Yep. It's very important note. And then this morning, we also saw jobless claims hit the lowest level since mid-July. So that's nice to see. And I'm kind of curious here how much that has to do with the change in leadership at that government entity, because it's frustrating, because you look back and hindsight is 2020, but if the numbers have been more accurate over the past 2 years, I really think that the rate cuts would have happened a little bit earlier.
Maybe, yeah, you're probably right.
I've really thought that. And this, along with the new home sales peaking a little bit, total sales, kind of staying the same. I mean, NAR came out with their numbers today, and you can see here total existing home sales. We've really kind of leveled off.
Yeah.
We're not going down anymore.
That's good. I like that. That's good news for me.
That's good. That is good news, because here's early in the year, and you can see how we took a big dip, of over 200,000 units. So now we've leveled off, which that's like, whew, again, that ray of sunshine. Okay, we've got a chance to turn it and move that curve back in the right direction for everybody. Okay. So we've got all this going on. And then we had talked about this a little bit earlier today.
With some of this data, like we just had the Fed cut, right? And is that what we're going into? We talked about, we're talking about 3 cuts for the rest of the year, which means it's a cut every meeting.
Yep.
The data today is kind of laying the groundwork where I'm like, are they starting to try to give themselves a way to wiggle out of a cut in October?
That's what I'm starting to feel. It's like, oh, okay, maybe that quarter was just enough juice to help the market recover. And you see, I mean, from a day ago, yesterday, you were at 92% that we're going to have a rate cut.
So that's and just for those that don't know what this graph is, can you explain kind of who puts this percentage? What does this mean?
What this graph is the CME group. It's kind of like looking at Vegas odds. They keep track of all the economists, everyone out there. And what they're doing is they're asking them, where do you project the Fed to be at the next meeting? So they keep this going every day, and they go and gather all the data every day. And right now, yesterday, 92% of the market said that we were going to have another quarter point cut coming in October. We lost nearly 10%, down to 83% today.
Based off of today's data.
So I think if we get a couple more, relatively good economic numbers coming out, I think we're going to continue to see this drop over the next week and a half. So it'll be very interesting to see next week.
We're last October, like the meetings, the last week of October, right? So you're talking, we've got essentially 5 weeks between now and then. If we see economic data similar to what we saw, like the positive, you're talking within the next 5 weeks, we can be a coin flip of whether it's going to happen or not.
Exactly. If it stays steady where we're at, jobless claims, all this information, housing continues to get a little bit of boost. We've seen the number of mortgage applications pop up. I think you said that refis actually took more of a jump than purchases, correct?
Yeah, we saw the refis, which I think a lot of people expected that, right? Like rates went down. Everybody was waiting for the Fed cut. We saw our largest week of new apps or new files into disclosures and so forth last week during the Fed cut week than we have as a company. Like it was our biggest week to date. And I think we saw that uptick across the board. A lot of the data that is going to come out is going to really showcase that refinances is up. And I think now we're going to start to see over the next couple of weeks, as long as these rates stay kind of stable, that we're going to see purchases start to go up a lot more too. Because I think a lot of the purchase demand, a refi is super easy. It's like rates drop, start going, get to work on it. Purchase is like, do I make the move? There's a little bit of uncertainty of like, what is payment going to be? When do I find the home? So we need a lot of the data, like home sales to go up, rates to stay low. You need like economy to feel comfortable. Like you need a lot more data on the purchase side. So I think we're going to see an uptick in applications on purchase side over the next month as an industry.
Yeah, I agree there. And the one thing I have noticed, what aren't you hearing in the background every minute of the day. Fed needs to cut the rates. Fed needs to cut
Yep.
the rates. Fed needs to cut the rate. I mean, my gosh, going 2 weeks into the Fed meeting, that was all we heard. Is the Fed going to cut? Are they going to cut a quarter? Do they need to do a half? Are they going to do this? And it was just nonstop in your ear. You know, what's the Fed going to do? What's the Fed going to do? And it's really kind of quieted down. You know, we got that quarter point, and it's just kind of like, okay, yeah. You know, now it's kind of quieted down. You know, it's as it gets closer to the meeting, it always picks up a little bit. You know, but we're not seeing that push that we've had in the past.
I think back to, like, if you look at it was last September, the Fed cut 50 bips, right?
Yep.
And then rates jumped from, like, rates are very, very similar today to where they were last September. Mm-hmm. But after the Fed meeting last September, rates within 30 days were back in the 70s.
Yeah. Yep.
We're seeing a little bit. I don't think we're going to see that happen the same way we did before, though, because smaller cut and more controlled cut. Like, I know that Trump was saying, you know, we need to do 50. We need it. Like, he wants more and more.
Yeah.
He really wants to stimulate through this. But a lot of people that I talk industry wise, a lot of people that we're looking at bigger picture, we really kind of feel like, you know what, like, it's okay to, like, pause for a second, because I think long-term growth is going to be, and long-term success is going to be better to do it more gradually than to spike it and then find ourselves kind of hitting back another cycle where now inflation gets back out of control. We've got to deal with all that. And now we're dealing with a lot more volatility. I'd rather be a little bit slower and more controlled than be too aggressive and have a lot of.
They're still projecting inflation to hit 2.9.
Yeah.
Next year they're projecting it at 2.6.
Mm-hmm.
So they're not totally under control with their inflation number.
Yeah.
That's always been their target. So I agree with you. It's like, let's control it a little bit more. You know, if we have to react, we can. You know, it's not like we can't do it.
Yeah.
But it's like anything. You know, when you run a race, you don't go all out. You know, in an Ironman in the first mile and a half, right?
No, you're dead if you do that.
You pace yourself, you know, and you watch yourself, and you adjust accordingly in your whole process of running that race, you know, because otherwise, I mean, you're on the floor, right?
Yep.
So, I mean, that's a great way to look at it. And then our numbers for this week, we bounced back from the horrendous we had last week. I mean, they were actually the worst numbers of the year for Orlando. Jump back up to 400. So we're back in that consistent, you know, 400 homes per week area. Inventories really kind of stabilized, sitting right around 9,000. You know, our condo market's still extremely soft. Gotten a couple calls from people who actually have their condos listed with other agents this past week, you know, asking for valuations on their property. They want to make sure they got it valued right. Okay. And it's like, guys, they're priced well. It's just, this is the market. You know, I don't have a magic wand any different than the people you're using. You know, if they're doing this and this and this, you know, they're doing their job, but it's just, you know, you're in a difficult market. That's just what it is right now.
Yeah.
You know, then we look, you know, here's our 9,000. This is the one thing I'm really starting to watch, and this number keeps going up, and that's the number of short sales.
Okay.
And I think we're just going to continue to see this again, because when you look at it, we haven't seen the price appreciation that we have in the past, and you're just seeing people who got to get out. And when you look at the cost of selling, you know, they're upside down. And maybe, and what's unfortunate is sometimes it's only $15,000 or $20,000, but they don't have the fund to come up with it for the closing. So we actually have to go into a short sale format. Form. Original list to sales price, you know, sitting right there in that, you know, 93%. So that's not really changing. There's still great opportunities out there for people to negotiate. You know, and here's our graph for weekly sales. You see how, man, August was just a tough month overall. I mean, we just took a solid dip all the way across, and, you know, come back up. I think we're going to see this. I'd like to see us get back to at least 450 on a weekly basis. Yeah. You know, through October, and I think we've got a good shot at that with the rates coming down a little bit. You know, people feeling a little more comfortable to take that jump. Yeah. I know I've actually talked to some clients over the past week. You know, that little bit of difference has just made that decision in their mind. Like, yeah, let's do that. You know, and actually, I think the first week of October or second week of October is actually supposed to be the best time to buy a house. So, you know, we'll see how those numbers work. then, we've got our inventory. Yeah, we've come down a little bit, but we're still sitting well above that 9,000 level. And there it is. And here's the graph for the short sales. And you just see it. People who've held off, and they've got to sell now. And we've just a very solid spike in the number of short sales in the Orlando area.
Yeah.
So I know I got approached to do one, and I'm like, okay, let's get it done. Start the paperwork. Hopefully, they won't take as long as they did back in 2008. Those were horrendous.
The process is a little bit different now, I think.
Yeah, but everything was a short sale, so it took forever.
Yep.
Then our condo market, we're still sitting at 9 months worth of inventory. That hasn't budged at all. Original list, the sales price sitting at roughly about 92%. The market's it's just flat. It's just so flat there. And then you just see the sales. Same thing in August. August has always been a slow month.
Back to school, right?
Well, yeah, people are back to school. People are getting out of that summer mode, getting back into like serious time, and it's always been a slower month, number wise. And then September, October, November, consistent, when you don't see too many spikes. I think we may get a little bit of spike beginning of October, even maybe the end of September, simply because people were ready and had their pre-approvals, and they just, okay, now I'm going to lock in. Now I'm going to get my house. So
Yep.
It was nice. It was nice today to be able to come out, bring you guys some rays of hope and rays of sunshine on the market. Just kind of a sit back and like, that's okay. I can live with all this. That makes me feel a lot better about where we're heading. And I think maybe we have hit that bottom. This is the first time in a while where I've kind of had that feeling like, yeah, I think maybe we've bottomed out, and we've got a chance to start going back up, which is a great feeling to have overall.
Yeah.
So thank you all for joining us today on the Orlando Real Estate Buzz. Please like and subscribe if you're on YouTube or Facebook, and please join us every Thursday. Thank you, Joe. Best of luck with your race. Yeah.
Well, we'll see. We'll have some
burn out in the early part. All right. Take care, everyone. Bye-bye.